Why these two segments? Because we found that these are the most impactful.
2 million buses, 20 million trucks. Almost 90% are privately operated and managed.
These are born with a lot of data. Every component throws back data. A fair bit of data that comes off from the battery as well.
If it's a school bus, battery swapping. If it's an intercity point to point, 350 kilometers, it may make sense to just do a fixed battery.
Welcome to Energypreneurs, the podcast where solar power batteries and electric vehicles come together. I'm your host, Sohail Hasni. When we combine these technologies, something powerful happens. On this show, I speak with founders, engineers, and investors who are building this fantastic new energy system. Thank you for joining. Good afternoon. Great to be connected. This is the first time I think I ever had 3 co-founders in one place. Really exciting. Maybe, Manav, you are the CEO. Maybe you can do the first introduction and we go through who we are. Thank you.
Good afternoon, and thank you for having us. My name is Manav. I'm privileged to be the CEO of the platform Drivn Transition. What we do is enable or take the challenge of financing out of intercity electric bus, large capacity electric trucks. Why these two segments? Because we found that these are the most impactful sectors in terms of emission reductions, but I will pause there.
Okay, thank you. Adwitya, I'm just anti-clockwise on my screen.
That's fine. Pleasure to be here, Sohail. Thank you for having us on the show. I run operations at Drivn. I think while we are a financing company, we also do look at how the assets are operating. What a lot of people don't know is that not just from a risk management perspective, but also from a, in time being able to help drive utilization perspective. That's my role at Drivn.
Thank you. Alpna?
Thank you. I handle business strategy and partnerships at Drivn. So whenever we interact with people who really run these large buses and trucks, traditionally fossil fuel dependent, is the key barrier to transition to electric has always been, how do you get to finance these assets when, do we really have the right capital to be able to make this transition? And that's where I think that's precisely the place where Drivn comes in. And we are looking at creating an impactful, dent in this very difficult segment, as Manav pointed out.
Wonderful. Wow. So you are bringing financing. So I personally think electric vehicle being sold as an asset doesn't make sense. It should be done through like an ESCO, energy efficiency company where someone comes and change all my light bulbs or a motor and say, okay, we share the benefit, because that way it may be more effective. So are you doing anything in that terms, like an ESCO service?
Yes, Sohail. So you actually very rightly pointed that out. We are in that sense really an asset co and does. So really it is the service of asset being available against a rental that is our product. So they don't have to really acquire and own these assets. They use these assets that come with a available uptime guarantee service and the associated charging infrastructure. And the operators really use these, rented assets and run their operation, something that they've been doing generationally and, something that they are being good at. Drivn really becomes the asset co in this. We own these assets and we rent it to these operators.
Oh, wow. Then you can easily do a sort of like a sale and lease back sort of arrangement, no? Fantastic.
Yes.
So maybe I know. Manav, you can take us through about what are the different projects have you done and what's the vision, what's the background of establishing this company? Because money is the missing part in all of those.
Yeah, we have Aditya here who will positively exterminate us if we continue to talk about only money. Because like you said, while we may sound like we are money, there is a lot more that we bring to the table. And I think that is something that we can talk about as we proceed in the discussion. But essentially what happens is that large size buses and trucks, which in general cost more than $100,000, $150,000, find it difficult to be financed for two reasons. One, the payback period or the amortization period of 5 years, which is typically what the Indian banking system lends at, is not sufficient to amortize such large capexes. Typically, an ICE bus or a truck would cost half, between a third to half of what they would cost. Therefore, the amortization over 5 years is easy. These require longer term amortizations, which the products are not available. So that is where we come in and we kind of bring down the payment, monthly payment that the operator has to make because it is amortized over a longer period of time. Why is it? Why an electric vehicle can be amortized over a longer period of time is a question that we need to ask ourselves. And the answer is actually very simple because unlike a diesel bus or a truck whose engine gives away after 5 years and they become unreliable, electric bus or a truck, as you would have known driving your own nice Tesla, is that their life is far longer because the number of moving parts are so much smaller and so much lesser and so on and so forth, except for the battery where there is a question to be asked. The second reason that the banks are not able to finance is the fact that there is a battery whose life is not coterminous with life of rest of the body. So you have to find a solution for battery separately and you have to find a solution for the rest of the product separately. And that's where a lot of tech comes in and our expertise comes in. What we have already financed, so we're looking for financing those routes which typically a bus would run upwards of 300 to 400 kilometers every day, because the longer period you have of running a bus, the easier it is to amortize. Again, a very rule of thumb number I can give you. It costs you about $0.50 per kilometer, and you're talking US dollars, we can talk rupees, whichever is the currency you like, $0.50 per kilometer to run a typical diesel bus, all included. It's an intercity bus. When you run an electric bus on the same route, it costs you about 30% less. Typically, an operator is able to run about 200,000 kilometers every year. So effectively, if you really look at it, what they save is, $0.50 into 30% into $200,000. So it's effectively about $30,000 odd dollars is which is then used to amortize the additional capex that you come from a large electric vehicle. I may have complicated it too much with too many figures in one sentence. I will pause here and first give it back.
No, this is fantastic. So you are effectively saying, that message doesn't come through very well, that electric vehicle will last longer as a bus than a traditional internal combustion engine bus. That's something, this is the first time I have heard. But battery, I think battery should last longer because, of course, you have a first life battery, second life battery, and all of those. And especially large buses. I'm working on a project right now in the Philippines on a conversion project. So I'm looking at that maybe battery swap may be a better option. Then, of course, the cost of ownership goes down dramatically, right? So yeah, this is fantastic. Numbers are good. Now, I want a question to saying, why didn't you look at battery swapping? Is it too complicated? Because you are doing bus ownership as a service in a way, right?
So we are agnostic to the energy solution, whether it is a fixed battery, whether it is battery swapping or OEM taking the battery risk. What we want to do is to be able to enable the operators to make that capital investment. In some ways, somebody is taking that battery risk, whether it is us, whether it is the OEM, or whether it is a battery swapping entity. And when it is a battery swapping entity, they will charge you, they will bill you for the charge, that is electric charge, and the cost of battery depreciation. Similarly, if it's a fixed battery, the cost will again be same. There is a cost of charging and over a period of time, depreciation of battery. At a broad rule of thumb number, because again, you said numbers are good, and I will have to revert to Indian rupees, it will cost you about 5 rupees, and we're rounding the numbers up.
5 rupees in US dollars, what would be?
Would be about 5 cents.
Okay, so let's keep it in US dollar and cents if possible.
Okay, 5 cents of the battery depreciation and about 10 to 12 cents or about 13 cents for charging the electricity, kilowatt hour that you spoke about. So that's effectively the cost of the energy of a bus or a truck. We're talking about bus because a truck will probably be about, the charging will be about slightly higher because it takes more energy to run a truck than to run a bus. So we are quite agnostic on battery swapping and fixed battery. Different use cases actually have one better than the other. For example, if it's a small run, if it's a school bus from an employee transport, which is running small 100 kilometers a day, battery swapping makes so much sense because you don't want to have high capex. If it's an intercity point to point, 350 kilometers, it may make sense to just do a fixed battery. In India, however, the battery swapping solutions for large format vehicles are just about emerging. And we are pretty much happy to be at the vanguard of those also. We're having deep discussions with battery swapping guys also. How can we help and support roll out their solutions? Because eventually what we are interested is the best cost or least cost option for our operators, our logistics service providers. I will pause here.
Yeah, fantastic. I mean, the reason I asked the swapping is, of course, that's a first thing people come in, because if it's a large vehicle, then cost of battery comes down significantly if you're going to swap to the owners and you can separate it out. But thank you for that explanation. And I also curious to Aditya that I saw, I quickly had a glance. You had in your CV somewhere, it says farming as a service. What is that? I mean, I've heard so many things as a service. Farming as a service, something I have not heard. Maybe you can explain. And also, you tell us what are the sort of exciting project that you are working in within this company. What is the big problem you're solving right now?
So farming as a service is essentially mechanization services for farmers. So a fleet of tractors, harvesters, and associated implements provided to farmers on a pay-for-use basis, so per hour or a per acre basis. That's essentially the model, a taxi service for farming, essentially.
Okay.
Which essentially meant fleet management and, a fairly large fleet. And that's the core strength that comes to Drivn as well in terms of fleet management. I think when I said earlier on that, the core of it is technology in a lot of ways, we're very fortunate. We have the luxury that EVs are born with a lot of data. Practically every component throws back data. Now that data can be on the vehicle and its location and, the basic sort of security of the vehicle, but also its usage. You'll appreciate, Sohail, that there is a fair bit of data that comes off from the battery as well, which is a very critical component. For us, data also is compliances on services, on servicing of the asset, making sure there is guaranteed uptime is being delivered. So there's a component of, tracking that. And equally importantly, maybe if not more, is the driver and how driver behavior impacts outcomes or for utilization or cost, whether it's, efficiency on energy usage or utilization in terms of making sure the machine is up and running and, doing the routes that are required, and indeed safety. We now have the ability in 2026 to have AI-enabled dash cams that can alert us when a driver is distracted or losing concentration and so on. Now, all of these give us a holistic picture of the asset, of the vehicle. And it doesn't matter whether it's a bus or a truck, the fundamental data points remain the same. This is obviously, you'd appreciate, important from a risk perspective, but also because we are working in different use cases and with different kinds of vehicle, all of this information over time does become a repository on which we can base analytics and be able to come to some sort of conclusions on what kind of vehicles ply better on what kind of roads, under what kind of conditions, and so on and so forth. I mean, that's a journey in itself, how you take all this data and convert it into insights.
Run a customer rewards program based on the driving behavior, no?
There is no end to this, Sohail. Once you have all this information, not just on drivers, but also on, how the operators are, how various vehicles are performing, this actually becomes very useful for the manufacturer as well, because this becomes insights for them for product improvement, for operators, for operations improvements, and so on. So that's how we look at, fleet management. That's the core of what we.
I think I interviewed someone from Africa. They had similarly not the trucks and buses, but more sort of a large van. They were doing, I think, out of Kenya. I have to check because they're similar as a service, and they were also targeting fleet owners so that it's more efficient, that you can sell in a bulk. So you must be also targeting some of the fleet owners, right? So that it goes in a bulk way, right? Because doing one or two or three or four, maybe transaction costs be quite high, right? And then, of course, the covariance of risk, all those detail problem cancels each other if you have a larger package, no?
No, if I just spoke like a banker. Yes, exactly. You deciphered our business model. So for us, we're looking at a book of almost $1 billion with no more than 300 to 400 clients. Now, it allows us, and why are we able to do that? We are able to do that because of two reasons. One, because per asset value is high, and we are targeting larger users. And therefore, the operating cost that we have becomes low, and we get that significant operating leverage. And again, for a banker, that leads to higher return on assets and therefore significantly higher return on equity. That's what makes our business model valuable. But yes, exactly. And this is something that nobody had caught in before. People were kind of focused on small form factors. And we give an example that for three-wheelers, somebody has to fund 50 three-wheelers or lease 50 three-wheelers before equal to our one bus. And they have to do it 3 times over because the life of that three-wheeler is like 3 years. And for us, it's almost 8-9 years. So it's effectively 150 users for us to do one bus. We'll be committing something like almost $130 million in the first 6-8 months of operations. And that for somebody in a small form factor would take thousands and thousands of vehicles. If it's two-wheelers, then maybe multitudes of tens of thousands. So that really is the core of our business model, a large form factor, large fleet operators, and therefore ability to both see the risk and manage the risk.
I like your numbers, and I'll remember 53 is a prime number, right? So 53 equal to 1. Yeah, that's fantastic because these numbers are important. People don't understand and they get carried away. Now, okay, just fantastic. Thank you for sharing. Now I'm coming to Alpna. If I'm a fleet owner and if I want to say change the world and decided to go for it, well, how do I start the conversations to the company, what you provide, or how do we approach?
Yes, thank you, Suhail. And this is exactly where a lot of these conversations start, really. I mean, you have basically what we've seen is there are two kinds of these customers. One who completely understand how to run fleets. Generationally, they've been doing it. So these are legacy operators, transporters. However, they don't know electric yet. They have an ambition, but they don't know it yet. The second category we've seen are the people who are also entrepreneurs, new age, zero emission platforms that are saying we only run electric. We do have the technical ability, but we are startup-y, so to say. So yes, we need to, this is a mandate and hence we need to run electric. Both the customers, one thing have in common that beyond the green imperative, the imperative to transition to this essentially comes from the fact that the operating cost is lower. Because overall, on the total cost of ownership basis, running electric is better commercial sense. So at the core of it, the decision is very commercial. What we end up doing and what we bring to this is our ability to actually sit down with them and understand their business model right at the start, understand what their operating track record is. And when they say that they have an ambition to, choose electric as their fleet of choice, then we actually sit down with them and understand what is the underlying use case. So if you're looking at buses, what are the routes you're going to be applying these buses on. And if you're looking at trucks, then what is the underlying, the project, the logistics project on which these trucks are going to run. So what this helps us do, and this is something so you would completely understand it, this help us do a project finance out of this particular thing where we have a project to solve for, where we actually look at, okay, is there underlying profitability of the use case, that viability is there or not? Because yes, we are a lease asset provider, but what will only make sense is if the operator of that fleet is willing to run this profitably. If there is just a green mandate, but the underlying commercial viability of the use case is not there, then it's not really sustainable. So what we bring to the table is these conversations, and in the process, assessing whether the underlying use case makes sense or not. What are the elements of de-risking that can be done to make this, underlying project viable, whether it is through bringing comprehensive AMC. So a lot of anxiety around assets management, know-how gets taken care of, because then the OEM is very well placed to handle, that risk of how the asset will perform. Secondly, bringing the whole, the charging infrastructure planning, where somebody, a charge point operator, comes in as part of this solution and says that, okay, I will provide charging as a service. If you are operating a certain minimum number of volume of fleet, then a dedicated or a minimum availability guaranteed kind of charging infrastructure is also provided to you. So what that gives and what that makes is essentially we are not only providing e-finance, we are providing e-solution to the client. So when we talk about, developing business, for us, it's a lot about solutioning with these clients, sitting down with them, understanding their business, and doing all of this at a pretty fast manner as well. Because for us, I think agility and the fact that you can really respond quick to this from the day you start having a conversation to actually coming back with a real commercial kind of a document, translating all of these into, number and contracts, we are able to do it fairly fast. So I think that's where the conversations are starting. And so far, we are actually, for the first set of deployment in the next 6 months, we are actually working with around 30 to 50 large fleet operators, being mix of trucks and buses, where a lot of these things, I think we are also learning along the way, because, and as they are learning about the asset, we're also learning about how to make our underwriting better.
Yeah, but
So I pause.
operationally, I'm just thinking loud here. Like I had a situation, I drive a Tesla. I was in Sydney. I remember I got up, we were going somewhere, and the car won't start. I mean, suddenly that's helpless. What happened? I mean, there's a person, the start meaning it's not going anywhere. There's nothing to start. So I called Tesla. They said, were your car connected to the charge last night? I said, yeah, we did a last minute update, maybe a conflict, just to a restart. And they answered my call within 3 rings. And while the car is starting, and then he transferred the call my mobile saying, if it does not, we are sending a guy to come and fix it immediately. Don't worry, it will be done. And the car restarted and it's fine. But now, maybe I'm an early adopter, risk taker. I would have tolerated half a day, even a couple of days. I should not be telling them that. But if I'm a bus fleet owner who just was using a bus for, I don't know, 50 years, 100 years, very comfortable, I can call any Joe Bloke from the street to fix my car, and I know, right? And suddenly you give me something that I have no idea. So what's your service level guarantee? If my car doesn't work, will you replace immediately as a loan unit, or you have people in place? How do you take that worry? I understand you take the worry of charging by providing charging as a service with some minimum standards, but you know what I mean. How do you answer that question if it doesn't work? What happens?
And that's a very valid and a great question there. So essentially, commercial fleets really, they do have a dedicated upfront planning that happens with, there is a dedicated charging solution. Like I said, at the start point and the destination point, which is captive charging facility for you and pre-decided opportunity charging point along the route. So one important thing is a lot of these, not actually most of these large heavy commercial buses and vehicles come with uptime availability guarantee from the OEMs, which, and available kilometers and long-term EMCs of as long as almost 10 years and 15, 16 years in some cases. So very clearly the uptime availability that the asset comes with from the manufacturer side, with tied in penalties if at all there are any breakdowns or challenges in the asset. One more interesting thing we found as we were, and this is when we were conceptualizing the product, is, at the team, we also had capability of somebody who had actually run the early set of these long route bus fleet in India, electric bus fleet in India. And the kind of data that was there in terms of breakdowns that were actually ground level data on breakdown of heavy commercial fleet. It was kind of the electric buses and electric trucks, if they are planned well and if there is an OEM with the backup service guarantee and the infrastructure, the breakdown is actually, there was like, it was once in 2 years of an asset, some of it which gets mitigated by a roadside assistance kind of a structure. But at the same time, yes, I think an uptime guaranteed assets, the technology has also evolved a lot over the period of years. So this is something that is an important piece in giving that comfort to a buyer of the asset. And this is what the asset brings.
Sorry, just to add to what
Yeah,
you
go
were
ahead.
saying, it's an important piece. See, the data that Advitya spoke about, will be able to significantly mitigate instances which can be mitigated. So unlike a normal bus, a lot of things go under the hood. In an electric bus, you have live data available to you, despite the fact it is hiding under the hood. And I'll give an example. For example, if when you buy a new car, it may say that your service will be due 10,000 kilometers or 1 year. Now, what it does not take into account is where did you run those 10,000 kilometers? You could have been running in the most salubrious climate, or you may be running it on the most tough terrain. Now, the depreciation or the requirement of service would be different whether you ran it on bad roads or whether you ran it in a great place. In an electric truck or an electric bus, however, you service when it is required to service, because you will be able to track that it is not 10,000 kilometers later when you need to do, for example, a preventive maintenance. It is actually at 7,250 kilometers or 15,000 kilometers. So the uncertainty of the challenges in a bus or truck gets mitigated because you have the data. And that is the reason of building that data layer and the artificial intelligence layer over the data layer that Advitya spoke about. We have a joke going on in our company. Whenever I say it, people believe that it's not possible. But we say that if, for example, Sohail is wearing a black down t-shirt today, we should be able to predict what is the occupancy level of Delhi to Jaipur service tomorrow. And the reason for that is because, that will predict the weather pattern, the weekday or weekend, so on and so forth. You can actually put a metadata there and come out with solutions. Similarly on the maintenance side. And Vita, if you want to add something.
Yeah, I think also goes back to the point we made about working with fleet operators. Having contractually maintenance in place is one thing, but having a critical mass of fleet getting deployed on every route so that the OEMs can put in place the infrastructure, whether it's people or yards or inventory, to make sure that if there is downtime, and these are machines, there will be some downtime, our response time is as fast as possible. So a lot of this actually goes into the planning of the projects that Alpna was speaking about earlier. It's not just where are they getting deployed and the numbers, but also how are we going to support it? How do we ensure that, this X% uptime is actually delivered? And that goes into factoring the economics of the route.
Yeah, absolutely. I think the practical solution is also important, because what is useful, because if you do too much, it gets too expensive, right? I remember the electric tricycle project in the Philippines that we did, because the tricycles, as Manav mentioned, they're smaller. So this question came up and I said, okay, solution is we'll put 2 tricycle in front of the mayor's house. Whoever doesn't work, you can come and take one. And we'll provide the part of the bidding process that people will provide additional units. It's expensive, but if you need that psychological comfort, that's what you need. So in your case, it's bus, but if you have back-to-back warranty and everybody's reputation it as a stake, no? So I think that also helps. Now, with all this data, you should be able to track almost real time how much carbon dioxide you are avoiding, no? So are you sort of monetizing the emission reduction? Because when you do it at scale, you should be almost be able to do at a programmatic level, no?
So answer to your question is yes, we are able to track on a real-time basis the carbon we are mitigating. In our current business models, we are not factoring this as a significant revenue. And the reason for that is that at the current, I mean, to be honest, the reason is that at the current pricing, it is not a significant portion of our revenue. However, we are particularly focused on is to bring about efficiency in the transportation system. And some of that comes from data. So for example, in a cement industry where almost 30% of the cost is logistics cost, if you're able to bring about even 10% efficiency, and it is not very difficult because Adwitya said driving behavior, you have a fleet of 700 or 1,000 trucks, and you're able to figure out that which driver or which driving behavior is better in terms of sheer efficiency. Sometimes you could even take a decision that it is perhaps not profitable to run your truck between, say, 12 and 2 in the afternoon, because the cost of that operation is far higher than the cost of punching up at some other point in time. Once you put on those factors automatically, not through a manual intervention, because at a meta scale that is not possible, the idea for us is to actually drive efficiencies at the fleet level. And what are those triggers? We have some ideas today, but some of them will actually emerge from the operations as we go ahead. What we are doing, however, is building up the layer to be able to capture the data, creating that expertise to be able to process that data and drive efficiencies. So direct carbon reduction is one thing, true, but being able to, especially on the trucking side, perhaps as much as the bus side, because bus you have to respond to the consumer needs, but on a trucking, there is a significant room for improvement on the efficiency of the transportation system. And now if you look at the country level, I mean, that is quite massive.
Yes, absolutely. I mean, it sounds like I have this aura ring. It sometimes tells you your body temperature is 1 degree more than average. You should not do any exercise today based on the data. So it's not AI driven that it cancels my calendar, all my exercise plan, but that's the world we are in. When you have more and more data, you are able to predict in a sort of not in a linear predictable model, but based on actual data. Oh, fantastic. Now, you're doing all of these things. Now, if that gets added up at a country level, no? Are you doing something at that level, at the national level? Because I know that Indian Bureau of Energy Efficiency had a lot of initial subsidies and incentive programs, because the national scale, there may be huge opportunity. Are you part of it? Is there anything? I don't know. I'm just asking. Any national level incentive program that's helping you?
Yeah, so this actually, I mean, very rightly, you actually got the numbers broadly there. So India, if you see, there are about 2 million buses, but there are almost 20 million trucks in the country as a whole. So trucks, obviously a huge, huger market. So 2 million buses, 20 million trucks. Now, what is more interesting is almost 90% of the fleet, most of these fleets are privately operated and managed. So really very little government interface, but for the fact that, these are operated and managed by private operators, both on the buses and the truck side. However, what the government has done remarkably well in the last 3 to 4 years is have done structured interventions that have led to creation of an ecosystem. They started creating a demand for making sure that the transition is led in the public fleet segment, which is the intra-city, the state transport corporations that run city transport buses. So there, a lot of intervention happened where public sector tenders happened and the transition started happening. So what that did, and there were, the capital subsidies, there were subsidies for the state transport corporations to adopt to, transition to electric fleets. And that over the last 4 or 5 years, not only developed the ecosystem, whether it's charging infrastructure providers, battery, making sure India gets its own production, base for a lot of these EVs. The OEMs got developed, the network for, tech, the network for service providers got developed. But that has essentially clearly put it out there that this transition that is commercially sustainable and makes sense for public transport fleet management needs to now travel to the private fleets, which is where entities like or business models such as Drivn comes in, where presently there is no, there are some selectively some subsidies available if you transition to electric fleet for the private fleet buyers. However, this segment is still so vast and so huge that access to finance through leasing kind of a business model is something that will have, almost an unlimited market in this space, even if we talk about, say, the aspirational EV penetration level of, say, 30% in the private fleet segment, whether it's on the bus or the truck side. Just the sheer numbers are massive.
I mean, the natural customers, in my view, of these things are power companies, right? So if you work with IGL Electricity in Australia provides, initially they started with you could go and lease a Tesla from them. I think now they have widened their vehicle base. Now they started a pilot for vehicle to grid. So basically power company. So in your case, ideal customers, you're providing the financing and the infrastructure and the tech, but maybe the customer face could be the power company who know these customers very well, right? And they have the charging infrastructure. Everyone almost can be charging as a flat fee. This is maybe the best way to scale up, because how many have you done so far? How many trucks and buses out of the 2 million and 20 million? Where are we?
Well, it's minuscule. I mean, to be honest, the answer is minuscule. India as a whole for large format trucks and buses have done barely what, 700-800 till now. It's just starting up. And in case of intercity buses, again the number is minuscule. So India has done tremendously well where government has been a counterparty and they sort of say underwrote the payment for buses which run within the city. So there we have a large fleet operating, especially in the bigger cities. But for the private sector that Alpna mentioned, where there is the biggest financing challenge, and these are the guys who typically run from one city to the other, the penetration has been minuscule. And the reason for this low penetration actually has been that the financing has not been available. So that's what we're trying to solve. And you're right, we have multitudes of go-to-market strategies, whether it be the be it the power companies, the charging guys, the OEMs, operators themselves, operator associations. We've seen some of the operators come together, some of the diesel operators come together and create syndicates to approach us, or we're helping them create that. So multitudes of go-to-market strategies, but effectively ensuring that we unlock the biggest hurdle that they had, or remove the biggest hurdle they had, which was the financing piece and the underlying tech.
So, I mean, where are you? How much money have you raised? You are a startup, right? How big is the structure? Where are you on that one?
So in terms of funding, we are now cashed up for almost 140 odd million. And that would allow us a fleet size of almost 1,000 vehicles, electric vehicles, large format. We have contracted for, and this number keeps moving, about 150 odd that we have contracted for, and like an LOIs for another 350 odd, perhaps. I'd like you'd have to get the she has the latest.
Yeah, you're broadly right. Yes, that's right.
Yeah, so that's where we are. And the typical routes that we have for bus markets is typically Bangalore and South is the heaviest bus market. Trucks are the biggest users of trucks are cement, steel, port, mining. So our first set of deployments are actually in cement. and one in steel across various cement factories or manufacturers.
So how did it start? Why electric vehicle? I mean, what brought you here? That should have been the first question, but
Yeah, I think it's like they said, the idea whose time had come. We believe that it's not too soon, not too late. We started with a thesis. We haven't moved from that thesis for last 1.5 years while we developed it. Large form factor, because there is still an alpha available. We believe, like most of the businesses, when you start with a higher perceived risk, there is an alpha available for the investors. And over a period of time, as you yourself dissipate the risk, the margin goes down. I mean, it's like Apple, you create an iPod and then you skin your own iPod to make it into an app. Similarly, we do believe that, by proving that there is limited risk, while we will perhaps make additional alpha to begin with, eventually the business model will take us towards lower cost of risk, lower risk, and therefore lower price of risk. So yeah, that is what we got there. The focus area, like you kind of spied right at the beginning, a limited number of customers giving you large assets under management that is available only in large format trucks and buses. Intercity, because intercity is all government and we don't need to really do government. We can actually have a higher profitability doing private. And then data, because on day one we understood, or even minus day one we understood, that is going to be our ultimate moat. When you have the operators who are doing 20, 50, 30 vehicles, they will not have the ability to invest and create the data bank that we would have. So the efficiency gains that we will be able to provide to them is something that they may not be able to do it on their own. So that is going to be our moat when there are more players competing on the cost of capital. That is been our thesis. Adwitya, if you want to add something.
yeah, I mean, you are sitting on $1 billion invest valuation just like that. The numbers 2 million, 20 million, you just started, right? You started 140 million. You must have a very strong team, no? How many people in your team now?
Yeah, I mean, we have a very strong team. We have a bunch of superstars. And I are the co-founders. We have another co-founder who works out of Singapore. He's been our fundraising rock star. We also have been blessed to have Mayank Jain, who leads our innovation. He's an IIT Delhi computer science graduate, eats data for breakfast, lunch, and dinner. And we have now a team of 13 to 14, going up to 30 by April. I mean, it may sound a bit, banal, but it's not the valuation that drives us. Perhaps at the stage that we are running the businesses, we don't get stardust by looking at the fact that it's a startup. We don't even consider ourselves a startup. We consider ourselves a new business. And the reason we make that differentiation is important. When somebody looks at a finance partner, you need to look at study, risk, which is managed, credit, which is evaluated. So there's a lot of these belts and suspenders that we put together so that we don't appear that, you're a startup and you're buying a market share just by being loose with how you manage that money. Yeah. So valuation is good because it allows you to raise more capital. But what is more important for us is the robustness of the business, the sustainability of that business, and the longevity of that business. That's how we've developed our mission.
And have you diluted much in terms of fundraising rounds?
Not much. We have our next round that we're raising is 150 million equity that we should hopefully be doing over a period of time. We would have enough with us to be able to continue to raise a few more rounds before we bring it to a logical conclusion of then growing through inorganically or through public market.
Yeah, because what you are building with all the data and all the strategy and the supported by government policy, that has, I mean, of course, I know that the Indian market is that you mentioned 20 million trucks. That's a huge number, but it has a global market steering, and in the region, you go cross border, Pakistan, Bangladesh, and I mean, these are a huge concentration. Then you go to Indonesia, you come to the Philippines. There's a huge population, a huge need. So if something that has worked, that is a very easily scalable. So you must have a very strong partnership with the OEMs, no? And the battery manufacturers. Whose car you are predominantly using, one supplier or multiple?
So, Sohail, we are by design OEM agnostic. Having said that, we do have our standards in terms of who we will or will not work with. And it's not just from a product perspective, but also, we are getting into long-term relationships. So how sustainably will we be supported through that relationship? So we are a little finicky about who we work with, but provided there is a standard being met, we are agnostic. At the end of the day, we are not force-fitting any machine solution on any route or any application. It's what works best in that situation that we have to go with.
I mean, having said that, if your portfolio size on the supply side is huge, then it's difficult to manage. If you have a limited, of course, strong OEM, then it's that partnership helps to give the customer the confidence that, yes, we have a long relationship and we working the thing that Alpana mentioned, right?
I completely agree, Sohail, and which is why I think minimum scale in every deployment is important so that our relationships with on both the customer side or operator side and indeed the OEM side are meaningful for them also and for us also. I think that's why, in every aspect of how we dimension and, look at the business, that scale does become important so that we can get that support. Fortunately, there are not too many OEMs. They're also early in their journey in this category. So, they are also eager to build the market and, we are credible partners for them to build that market. And in some cases, even their capabilities, even while we're upping our own capabilities to do that together.
Yeah, and with all the data that you mentioned, when autonomous driving comes to this data will be very useful for you to get into that direction. No?
I personally have my own views on autonomous
Yes, please.
contexts like India. I think the compute power required will be significantly higher than it would be in some of the other parts of the country. We'll have to factor in, pedestrians and cyclists and cows and, no traffic laws. I don't know if we have the compute power available yet.
Till
Autonomy.
sort of the few cars that I have driven, I think at the end of the day, it will take us a while, but once you put that trust in, you will trust maybe a bit more.
Those cars do exist way more only in the
Yes.
Indian context.
No, but Indian context also, I'm sure that the drivers, the speed at which they drive and the accident that happens. So if you have an autonomous, where the driver maybe has a less risk of fatigue and
Yeah.
long driving hours, maybe some sort of support will help, machine support, right?
For sure. And I think that's where, electric vehicles and new age vehicles do have that edge in terms of what can be doable. We also don't know what applications will emerge, but clearly there will be far more applications than would be in an ICE vehicle.
Yes, yes. I mean,
So-
and you have a battery. I mean, you have a power station sitting there. You can do whatever you want. You can run your washing if you want in a big truck while you're driving, right? Anything is possible, right?
Anything is possible.
Yeah, yeah. I mean, this is super exciting. I know this discussion can go on and on. I'm really excited, but I just have a few more questions. In terms of financing, maybe it's a question that goes to Manav or Alpana. Have you guys approached ADB Ventures? There is a Asian Development Bank Venture Fund, because definitely you can argue a public goods element, and then maybe they can help. They do take some equity position, as I know.
No, we have not yet reached out to Asian Development Bank Ventures. We also are aware of PSOD, and I think pretty much somebody we would like to. Not only because they provide money, but like you mentioned, that some of the solutions that we're working on perhaps has wider regional application. So ADB does come with that mindset that's global in nature. We do have inward interest from some of the other development financial institutions, DFIs. But yeah, we pretty much plan to visit Manila and pay our respects to PSODs as well.
Yeah, yeah. I mean, I see Alpana's background. She's a former IFC, right?
That's right.
No, I mean, this is fantastic because, this is the future. And one of the reason I established this podcast is to just bring knowledge, what's happening with you. I mean, today, some of the listener might say, okay, I can do the same and look you up, right? That connection helps because this is a new technology. While the early adopters love their cars driving, but how does the late adopter or a government sitting on a policy, what confidence do they have to put public fund to financing something, not knowing well that it will work or not? So they need comfort. So you doing this, obviously doing a big thing in India, but in other countries might also feel comfortable, right? So this is fantastic. Thank you. Before I go, maybe I'll ask each of you if you want to share something else that I did not ask. Anything else you want to share, Alpana?
Yeah, no, thank you. And I must, end this with also, I think from my side, for me, it is almost like a moment of joy, a sheer joy and feeling humble because I am an ardent podcast listener myself. And I almost, always follow what is it, what are the minds thinking in terms of the space of energy. So for me to be part of, along with my team, to be here and do this conversation itself is very inspiring and grateful for this. And in general, we'll be very happy to connect. I mean, there's so many dots that one can connect because you would probably have from these conversations the vantage point as to, like you mentioned, similar business model in Africa or a similar business model in other regions. And there's so much to learn from, cross learning is always gets us better in a better place. So I think really thank you for the opportunity and it was a pleasure to have this conversation.
I at least know 6 players in Australia who's doing the same, at least 6, I think. Yeah, I mean, I'm more than happy to connect, but anyway, Aditya, you want to say something?
No, thank you for having us here. I didn't know what to expect when this podcast was scheduled, and I'm so glad that the questions that you had were very insightful and very deep in terms of how we're approaching it, and gave us the opportunity to share via you to the world how we see this business and how we see the future of this category evolving. Thank you so much for the opportunity.
Thank you, really. And Manav, back to you.
And first of all, a lot of gratefulness to you. Thank you. And just one wish or a request. Please back us up. Please wish us good luck. It is a tough journey. We're moving ahead at pace. So we do look forward to wishes of well wishers and friends. And hopefully in a year's time, we will come back on your podcast and report back good tidings.
Absolutely. Thank you so much for your time. But just an idea, you must be aware of the Asia Clean Energy Forum that ADB does.
Yeah.
This June, you can come and tell your story if you have the time.
We would love to. We would love
Yes,
to.
please do. I think they just announced. I mean, I used to be very closely involved. I used to push an electric vehicle session. I did for 5 years in a row, and then I got tired. But now I'm no longer part of the bank. But yes, I think you can even. I'll send you an email that has recently come for, and that's for all listeners. They have asking for abstracts, what you want to do. This is a week-long thing that happens at the Asian Development Bank, first week of June. I think this would be the 11th year, if not longer. So you can come and tell your story. I mean, at least 1,500 people will be attending. A lot of government officials from across Asia because ADB does invite at least 2-3 participants. So it helps you to bounce off ideas with others. And it's a good thing. So if you can afford the time, I can connect you with some of the people as well.
Oh, we would love to. And same with the listeners as well. Would love to meet as many of them. Any questions, anything we can be, we're very happy to. And thank you so much for making that connection. Really appreciate it.
Thank you so much. Thank you. Bye-bye.
Bye.
Thank you for listening to Energypreneurs. Let's work together electrifying everything. This podcast is available in audio form on your favorite platforms and in video on YouTube. Please feel free to subscribe to our channel, and we always appreciate your comments.